Welcome to the channel. Today, we are completely destroying the myth that you need a good personal credit score to access massive business capital. The financial landscape in 2026 has fundamentally shifted away from traditional banking methods. If you are still relying on your personal FICO score to fund your enterprise, you are playing a losing game. The elite players in the wealth creation space do not use personal guarantees. They use the power of their employer identification number and modern cash flow algorithms to secure business credit cards with absolutely no credit check and 100% guaranteed approval odds. This video is your masterclass on how to bypass the outdated credit bureaus and tap into the new matrix of corporate funding. We are going to cover the exact mechanisms that allow fintech companies to issue high-limit cards without ever looking at your past financial mistakes. Let us begin by understanding the core problem with the legacy financial system. Traditional banks treat your business as an extension of your personal identity. They demand a social security number, and they tie your business liabilities directly to your personal assets. This means if your business fails, your personal life is ruined. In 2026, this model is obsolete. The new wave of corporate credit cards relies entirely on revenue-based underwriting. These institutions do not care if you have a bankruptcy or a terrible payment history from 5 years ago. They only care about the velocity of money moving through your business checking account right now. This is the secret to the 100% approval concept. If you have verifiable cash flow, you have access to credit. It is a purely mathematical decision made by artificial intelligence and machine learning models. To access these no credit check cards, you must first build a bulletproof corporate foundation. You cannot do this as a sole proprietor. You must register a formal business entity like a limited liability company or a corporation. Once your entity is registered, you obtain your employer identification number from the federal government. This number is your golden ticket. It is a fresh start. It has no negative history attached to it. The next step is the most critical part of the entire strategy. You must open a dedicated business checking account, and you must treat it like a sacred vault. The fintech algorithms will eventually connect to this account via open banking protocols to analyze your financial health. They want to see consistent deposits. They want to see that you are actually conducting commerce. Now let us dive into the types of cards that offer this guaranteed approval without pulling your credit. The first category is the modern corporate charge card. Companies operating in this space have completely abandoned the hard inquiry model. When you apply for their products, you link your business bank account through a secure connection. The algorithm scans your transaction history over the past 90 days. It looks for consistent revenue streams and healthy average daily balances. If your business is generating steady income, the system instantly approves you for a corporate card. The limit on this card is directly tied to the amount of cash you hold in your account. Because they have direct visibility into your assets, they take on zero risk. Therefore, they do not need to check your personal credit score. You get a sleek physical card and unlimited virtual cards to manage your digital advertising and inventory purchases. The second category involves secure corporate credit builder platforms. These are specifically engineered for businesses that are brand new and have zero revenue yet. With these platforms, you deposit capital into their treasury management system. That deposit becomes your credit limit. While this sounds like a traditional secured card, the application process is fundamentally different. There is absolutely no soft pull and no hard pull on your personal credit profile. You are simply exchanging liquidity for a formalized credit instrument. The true power of this strategy is that these platforms report your excellent payment history to the commercial credit bureaus like Dun and Bradstreet. You are essentially buying a positive commercial credit profile. Every time you swipe the card and pay it off, the algorithm records a positive data point. Over a period of 3 to 6 months, you will generate a robust paydex score. We also need to discuss the rise of e-commerce-specific virtual cards. If you are operating a digital storefront or an online fulfillment business, you have access to specialized funding vehicles that ignore personal credit entirely. These financial platforms connect directly to your seller dashboard. They evaluate your daily sales volume and your return on ad spend. If your metrics are profitable, they will issue you a virtual business credit card specifically meant to scale your advertising campaigns or buy bulk inventory. The approval is guaranteed as long as your store is generating consistent daily revenue. They do not care who you are personally. They only care about the performance of your digital assets. This creates an incredible leverage loop where your sales fund your credit and your credit drives more sales. Understanding the billing cycles of these no-credit check cards is incredibly important for your cash flow management. Unlike traditional consumer cards that give you 30 days to pay your balance, many of these modern corporate cards operate on shorter cycles. Some require weekly payments. Others calculate your balance dynamically and deduct it directly from your incoming revenue. You must adjust your accounting practices to handle this rapid velocity. If you fail to maintain the required balance in your linked checking account, the algorithms will immediately freeze your credit lines. There is no grace period, and there is no customer service agent you can call to beg for more time. The machine dictates the terms. You must run your business with strict financial discipline to thrive in this new ecosystem. Let us talk about the exact steps you need to take this week to prepare your business for these approvals. First, you must scrub your business bank account of any negative indicators. The algorithms hate non-sufficient funds fees. They hate negative daily balances. If you have any overdrafts on your record, you must wait at least 60 days before connecting your account to a fintech lender. You need to show a pristine pattern of positive cash management. Second, you should consolidate your revenue into one primary operating account. If you spread your money across 5 different banks, the algorithms will only see a fraction of your true financial power. Put all your deposits into one main account to maximize your perceived revenue and secure the highest possible credit limits. Another massive benefit of using these no-credit check systems is the protection of your personal utilization ratio. When you use your personal credit cards for business expenses, you run up your utilization. This destroys your personal credit score and makes it impossible to buy a house or finance a car. By shifting all your corporate spending to these revenue-backed business cards, your personal credit report remains completely clear. Your personal debt-to-income ratio stays low. You are essentially separating your financial life into 2 distinct universes. Your business universe handles the heavy lifting and the massive cash flows, while your personal universe remains safe and perfectly optimized for your private life. We must also address the concept of scaling your limits. With traditional banks, getting a credit limit increase requires another heartache.